Hello all. So recently, Government of India it has released the first advance estimate for the year 2024-2025. As per this estimate, the India's real GDP is about to grow by 6.4%. Right? This is much less than the earlier expectations. If you know, in the last year, India's real GDP it grew by 8.2%. Previously, in 2022-2023, India's GDP it grew by 7%. So this year's GDP growth or estimated GDP growth is much less than the previous 2 years. Hence, in this particular video, we are going to discuss what is GDP, what is real GDP, what is nominal GDP, what are the reasons why GDP growth is going to be sluggish this year, and what can government do to enhance or boost our GDP growth, right? So starting from the news, the recent estimate says that the real GDP growth, which is compounded annually, right, since the year 2020, financial year 2020, is only 4.8%. Meaning in last 4 years, if we take the average growth, it is only 4.8%. This year it is going to be 6.4%. So coming to this, first let's understand what is nominal GDP. Right? Nominal GDP. Firstly, what is GDP? GDP is the total value of all the goods and services produced in an economy in one financial year. Right? That is GDP. Now, if we take the prices of goods and services in the current year, we get nominal GDP. Yes. So what is nominal GDP? All goods and services produced and their prices of current year multiplied by the prices of current year. This gives us nominal GDP. On the other hand, what is real GDP? Real GDP is when we calculate GDP using the price level of base year. Okay. So right now the base year for our GDP calculation is 2011-2012. If we take the prices of 2011-2012, we get real GDP. Right? Basically meaning real GDP, it is adjusted for inflation. It removes the effect of inflation and hence it is real GDP which matters the most to us. Right? So real GDP growth is going to be 6.4% in this financial year. Now, so let's discuss why we are saying that our GDP growth trajectory is decelerating. Reason being, if we take from 1991 till 2019, so 1991 was the year when LPG reforms were brought, and 2019 was the year when COVID pandemic, 2020 was the year where COVID pandemic came, and hence in this period our compounded annual growth rate was 7%, right? It was 7%, but after COVID it has reduced to 4.8% only. It is a sharp decline. It is a very big decline, and hence economists they are concerned about India's GDP or India's future, right? Now if we talk about nominal GDP, it has grown by 13.5% compounded annually, and real GDP it has grown by 7%. Now, what is holding our GDP? Why our GDP growth is stuck? So, in order to understand that, first we have to understand how do we calculate GDP, right? So, there are three methods of calculation of GDP. One of them is our expenditure method, meaning if we calculate all the money which has been spent on buying goods and services, if we total this all money, we get the GDP, right? Now, where do we spend money? Under expenditure method, of calculating GDP, there are we categorize expenditures into four category. The first one is private final consumption expenditure, meaning the expenditure which is done by individuals and households on their consumption, right? This is the biggest element of India's GDP. It roughly constitutes nearly 60%, right? So PFCE, it is the biggest element or component of GDP, right? Now the thing is, in the pandemic year, this PFCE it reduced by 52% rather than increasing because the paying capacity of people came down. The PFCE it reduced by 52%. After pandemic, immediately after it, in the year 21-22, it increased by 11.6%, and later on in the next year, and this year it is expected to increase by or grow by 7.3%, right? And the next component of GDP or expenditure to calculate GDP is government spending. Government spending means all expenditure done by government, not on investment, but the consumption expenditure done by government. It is called as government financial final consumption expenditure. So for example, basically for giving salary, for welfare, these kind of expenditure, they are not investment. If we take all these expenditure together, we come to the second component. Now the thing is, this component, it roughly constitute nearly 10% to India's GDP. Now government spending has only increased by 4.2% in this year, right? So it is below the expected rate. It has only increased by 4.2%. In fact, if we take the compounded growth, the compounded annual growth since 2019, it has only increased by 3.1% per annum, right? So this is also a reason why India's GDP growth is less than the desired growth. The third component of expenditure is investment and productive capacity, right? Meaning gross fixed capital formation, meaning the investment which government as well as private sector makes in order to create infrastructure, or in order to create new capacities, investment purpose, right? So for capital expenditure is the third component of GDP. Now this amounts to nearly 30% of GDP. So we have seen that first component, that is private consumption, it amounts to nearly 60%. Then government spending on consumption is nearly 10%, and the investment expenditure is nearly 30% of GDP's contribution. Now this is expected to increase by 6.32%, right? This year, this third component, that is fixed capital formation, it is expected to increase by 6.32%. And in fact, again, if we take it over a longer period, the annual average is only 5.3%. Yani ki after COVID pandemic, the average investment is increasing only by 5.3% compounded annually. Meaning, again, this is also below the desired rate. Yes. So third component is also, lagging. And the fourth component of GDP calculation by expenditure method is net export. Net export means total export minus total import is net export, right? In India, the net export is in negative, meaning we import more than we export, right? And hence this component also, even though its contribution to GDP is very minimal, this component also, it lowers our GDP growth rate, right? Because it is negative. So this is what, because of all these four component of GDP calculation or expenditure method calculation, or in all four of them, we are lagging. Our GDP growth rate is below the expected rate. Now, what are the challenges in front of us because of low GDP? The thing is, again, because of COVID year, our GDP in that year, it was in negative. It was in negative. And immediately after COVID, at that time we saw good growth rate. Reason being, the base was very low, or because of low base effect. Because during COVID year, the GDP, was so low that the next year, if we, see or calculate the growth rate, the next year's growth rate was very high. Reason being, the base year or the 2019-2020 year, that GDP was very low. And hence, the next thing is, if we want to see India as a developed country or a Viksit Bharat, which government says by 2047, it is said that we need to grow every year by 10%. But if our growth rate will be 6.4% only, will not be able to achieve this target, right? So what we have to do is, again, to understand it again, that the growth rate is decelerating. It is only 4.8%. If we take the CAGR, right? If we take annual growth, it is more than 6%. And the reason being that private consumption is weak. The government spending is also sluggish, that we have seen. The investment rate is also declining. Private companies as well as government, they are not investing to the, I mean, again, expected amount. And exports, India's net export is in negative. So what is the way forward? What should government do? So government, firstly, what it can do is it can boost private consumption. Now private consumption will increase when people will be having more disposable income, right? So if you follow the current affairs, you might have been reading that government is planning to reduce the tax rates, or basically to collect less taxes from people, so that people will be having more money with them and invest. It will boost the consumption by private people. The second thing is to increase government investment. So government should keep on be investing more, right? This new investment will boost the production capacity, which will be helping in increase in GDP. Similarly, private sector should also take onus. They should also be encouraged, or they should also increase their investment into the economy. And lastly, the export potential of the country. Like we have seen that India's imports are more than exports, right? We have to reverse this trend. The export potential we have to enhance, right? We should be seeing more export from India. And we have to, for all these such things, what we can do is we can focus on structural reforms like new labor laws, new taxation reforms, to ensure sustainable long term economic growth, right? So many structural reforms can be taken by government in order to uh, I mean, take care or deal with the above challenges. And hence the conclusion is कि firstly it is real GDP which gives us the real number, or which is the something which matters to us. Then secondly, we have to, in order to have strong GDP or strong economy, what we have to do is key sectors like private consumption, government spending and investment has to be increased. And lastly, productive capacity must, or investment, that has to be accelerated, right? So I hope now you are able to better analyze what was the news about. What does it mean that if India's GDP is going to increase only by 6.4% this year? What is CAGR, compounded annual growth rate? All these terms are clear to you. How do we calculate GDP? What are the three methods: expenditure method, income method and value added method? We have discussed only expenditure method. So I hope this topic is clear to you. Thank you.